Good morning and happy Friday. Randy Mendez with the Mendez Home Team at eXp Realty. And I'm so excited to be back at it with Sharon Thompson, or should I say Sharon Herman now? Which one should I say?
It's still in the middle, Thompson Herman.
Thompson Herman. Okay. And you're still with Alameda, right? No changes
Yes.
there? Okay, good.
We're still good there.
So still with Alameda Home Mortgage, and we are excited to be back for our Money Matters series that we do every Friday. We had a couple weeks off with the holiday, and so it kind of feels like we're a little bit out of rhythm, right?
Yeah.
So, but I'm excited to be back in the hot seat, and we are still in an unprecedented market, and so today we're just going to talk a little bit about investment properties. And so yesterday I was actually on a podcast, and we were talking about how cash is flooding the market, but we've actually seen a little less competition from investors because instead of using all of their cash, they are taking advantage of these interest rates. And so, they're like historically low interest rates. We're going to keep more of our cash on hand. And so we were kind of just talking about that dynamic. And so one of the questions that a lot of our clients have is that I want to invest in a rental property, but it's kind of twofolds of, is now the right time? And where do I even begin? So I'm excited to get some insight from you today on those, Sharon.
I get a lot of the same questions. We have a lot of sellers that are sitting on a ton of equity right now. And they keep seeing my house could sell for this, my house could sell for that. And they're counting their chickens, right? And we've explored a lot of these clients with upgrading. And it's such a crazy market that a lot of them have backed out and they've said, this is too stressful because they can't list their house and go buy a house. And we've come up with all kinds of tricks to that trade as far as how can we list your house and upgrade you? But a lot of clients have also said, I want to stay put. Maybe I should, buy a rental property instead. And we have had a lot of clients say that. And so if you're one of those clients, or if you've been thinking about it because you're sitting on all this equity now, one thing that you can do is refinance that primary residence and pull the cash out. Investment properties are typically 20% down, and we are seeing still a ton of condos and smaller homes and great investment properties to where we can pull that cash out of your primary residence, still keep you in these record low interest rates on that refinance, and make that equity work for you. The other question that I get a lot of, Randy, and I'll put this back in your corner, is do you think this market's going to crash? And is it worth it to buy an investment property today?
I'm glad you gave me the loaded question back, right? Obviously, I will tell you that, every economic study, everything I see that, everything I read, everyone that I'm kind of following right now says, this isn't a bubble, right? This is an inventory issue. This is true demand. We also are seeing, and again, we've talked about this a lot, but we're seeing a complete disruption in the migration across the country that we've never seen before. And that is giving some true increase across the country. And so I definitely don't see any indicators that show that we're just going to all of a sudden have a bubble. In fact, my husband and I were kind of having this conversation today because we've listed a handful of properties over the last couple of weeks. And one of them in particular caught my attention because our clients purchased the property for $55,000. And so I just was, talking to my husband, because this is one thing I always say to our client, Sharon, is that, there's not necessarily, I don't believe there's a bad time to buy. I believe there's a bad time to sell. Right. And so I think that kind of goes hand in hand with the investment strategy. If you're going to be spreading yourself extremely thin and you're going to be very, very close on margins, it might not make sense. You want to have a little bit of breathing room. But here's what I can tell you. The demand in the rental market is there. We are still seeing unprecedented rental rates, right? And what has happened, like you kind of alluded to, is we've seen some people just say, you know what, I'm going to tap out of this crazy buying game, and I'm just going to go ahead and stay, renting. We've also seen kind of our normal seasonality of the summer dip. Also, COVID has, some areas have started to open up, so people are vacationing, and so we are still seeing a lot of people that are just saying, you know what, I'm going to rent. And again, if it doesn't make sense, like I have one client, Sharon, that they've got to be out of here in 18 months. And so they're like, I have no desire to own an investment property, so I'm just going to rent. So I think it's really important that you kind of look at those factors and make sure, just like a home, if the market goes down and you lose a little bit of equity, or now all of a sudden you got to rent the house for $300 or $400 less a month, is that something you're still going to be able to afford, right? And so I think that those are the conversations that you have to have when you're looking at the investment property.
I agree with you. And the one thing that we see right now that, like you said, unprecedented times, is that there's so many investors that are selling, they're taking their money and running, that we have so many displaced renters. So kind of like what you said, we have an inventory issue, and we have an inventory issue when it comes in the rental market. So right now, renters are paying more than they've ever paid. There are an influx of renters out there looking for somewhere to rent. So, and I think it's a great time to buy an investment property. The big headline in the news lately has been inflation, inflation, inflation. What is it doing to the housing market? What is it doing to the country as a whole, the world, et cetera, et cetera? Well, one thing it's doing to the housing market, it's also causing a shortage in the sense that builders have slowed down because product is more expensive. It is driving up the price of those new builds. And so once again, this is driving the market in, a seller's direction and not a renter's direction. And that's where, like I said, it's a great time to tap into your equity. It's a great time to tap into other ways to find that rental property, because it is still such a great time to buy and invest. And when you talk about money is cheap, there's no better time to buy an investment property while money is cheap. And it is a way of hedging your investments during this whole inflation situation.
Yeah, and I think that that's just the component that's so important right now, is that you really just kind of have to evaluate things. And I've heard a couple of my clients say, well, I'm going to wait until I have 30% down to do the investment property. And I've just kind of talked to them about, okay, what does the timeline look like for you to get that additional 10% or that additional 15%? And really, what does that reflect to your payment and to your ability to capitalize on where rates are now? And so a lot of times, even on the investment side, it just doesn't make sense to try to outsave, the interest rate. It kind of makes sense to get in there and look at the numbers. And so I'm excited. I do agree with you. I will say that this week, I was just kind of looking for one of my clients that needed something short term, and there is less and less inventory on the rental side, which I think that demand is going to be here for a while. We've actually been, I'm just trying to think from a property management side. I think we've been, it's been even a little bit longer than the resale market that we've seen the strength in the rental market. And keep in mind that one thing we can do is, in addition to, Sharon on the front end, really going over the numbers with you and helping you to understand what your payment's going to look like. There actually are even a couple programs that I think you can get in on the investments at about 15%, right, Sharon? I mean, I think there's a couple different options. If you're just under 20%, there are options.
Yes, absolutely.
And then what we can do on our side is we can kind of talk to you about the pros, the cons, the highs, the lows. I think it's important to know kind of what your rental range is, and you can make some decisions based off that conservative side. So we can say, on the conservative side, this is what you'd be looking at. But another thing that's really cool in the rental market right now is we're seeing tenants remain longer than they ever have. And so, we're seeing some tenants that have been in the same place for like 4 and 5 years. In fact, it's kind of a catch-22 for me, because I love that for my investors. But then I have a couple tenants that they're like, well, we just have a sweet deal. And I'm like, guys, like, you've been renting for 6 years. We got to move you out of this. Like, we want you to understand that. So, ultimately, I'm excited. I'm excited that there's, that we have this market. I'm excited that we're getting a little bit of reprieve. I don't want to speak too prematurely, but we have one client in particular that we share that I'm so excited we finally got in contract. It was like 6 months, and I'm so excited for them. So whether you're looking at that primary, or maybe you're looking at how do you leverage that equity, we would love to have a conversation with you. And I do think, it's important to do something with it, right? Because it just isn't there. So I think that's probably one of my biggest things, is really make sure you do explore how you can capitalize on that equity right now when you have it. And it is probably at the highest level. So anyways, any other final tips on how to get into, that first time investment property?
I think that's a good little snapshot for today.
I think so as well. So as always, thank you for joining us for Money Matters. We're here every single Friday. Please always feel free to reach out to us, ask your questions. You can Facebook message Sharon or I, or you can, of course, get a hold of me on my cell phone, 775-379-8344. And Sharon, what's yours?
949-201-8940.
All right. And hopefully you have great professionals in your corner. But if you don't, give us a call. We are ready to go and kind of help you to navigate this. So talk to you soon.
Happy Friday. Guys.